Today, the move in the market was questionable, is how I'd put it. Everybody's starting to hit you with the, what's going on? And there's a few different things that could contribute to this. First, starting with Jamie Dimon, CEO of JP Morgan, warning, and this is coming from one of the largest banks out there, that investors are demonstrating an extraordinary amount of complacency towards the risks of these extreme levels of tariffs that we have right now. And I looked up complacency. I'm going to be real with you. Complacency pretty much means like, I don't care. So he's saying investors are showing that they don't really care about these tariffs and how extreme this could be, and this could be very risky. Eroding confidence doesn't matter until it suddenly does a lot. These tariffs are pushing countries away from the US and closer to working with other countries. So imagine the US just being completely left out of the group and how lonely it could get, so to say. At the same time, increasing chances of inflation and stagflation are arising, is pretty much the warning here. And inflation is the level that prices increase, so the percentage at which prices increase. And stagflation is defined as high inflation, high unemployment, and stagnant economic growth. And let's talk about how these tariffs could work. Let's start off with getting the tariffs. And tariffs, what do? They raise the costs of stuff. So what we expect to pay in the future of higher tariffs or higher prices, that increases our inflation expectations. And then companies start raising prices. Once prices go up, in a way that lowers demand, right? That's just common supply and demand right there, how common economy stuff works. Then if there's less demand, companies need less workers. There's less demand for labor. Unemployment goes up, or less hiring happens in the first place. Then if everybody starts noticing this and people start talking about it, people start, well, what if I lose my job? What if these higher prices cause people to stop spending because of this and they start saving? That leads to less demand because now people are spending less money, they're saving, and then it's just an endless cycle. Less need for workers, fear of losing job, high prices, lower demand. In a way, right? In a nutshell. And what Dimon went on to talk about is how stocks could sell off, credit could become more scarce, geopolitical risks are high, and that these tariffs are all risks on the table that people aren't considering. But there is some good news, and the good news comes from Home Depot today. Home Depot shows that things aren't necessarily bad yet, that the home improvement chain beat on sales, they missed on earnings as far as what expectations were. They maintain a good guidance, so earnings per share came in at $3.56, short of the expectations of $3.60. What the first quarter showed is that sales were favorably impacted by unseasonal weather and deteriorating consumer confidence. What did we say earlier? I read this, by the way. This isn't just for me. Eroding confidence doesn't matter until it suddenly does a lot. And then let's go back to the first quarter. Sales were favorably impacted by unseasonal weather and deteriorating consumer confidence. This was the first miss in 5 years for this company. They usually beat expectations, and it's happened 19 consecutive quarters in a row by an average about 4.8% on average where they beat. Investors were happy to hear, though, that they reiterated guidance and that they won't be raising prices, unlike what Walmart said. We're interested to see what Target says, though. About raising prices, and we still got Lowe's and Ross and TJ Maxx and all these other places. People are going to be watching for signs of rising prices from these tariffs. But back to Home Depot, they said that more than 50% of Home Depot's purchases are sourced in the US. That's good for Trump business, right? That brings jobs back to America, and that's pretty much his whole slogan. Executives believe the worst of the economic turmoil is behind us, pointing out that the stock market recovery, low unemployment, and rising home prices are actually a great thing. Most of the chain's engagement is centered around smaller projects right now, with consumers putting off those larger ticket, bigger ticket purchases. And this is due to the fact that many consumers will usually finance a larger project, and with higher financing costs, that lowers their willingness to or ability to even qualify for these credit products. Many will be watching what happens with this real estate market because it plays a huge role in the home demand industry, and many other jobs are impacted by the real estate industry. Many renovate homes before selling or after buying, but what we're seeing is that lately Americans just haven't been doing much of either of that, with March existing home sales being the slowest since 2009. Higher home prices plus higher rates equal a slower market altogether. That just slows down demand, and everybody's going to be watching how these tariffs continue to impact things, because we already know that home prices are high. The median sales of homes sold in the US has just been straight up. Lately it's been pretty flat, and that we've been seeing that show up in the data. But aside that though, mortgage rates have all been going up. Let's zoom out real quick. Let's go back to the max chart, and we see that every recession, this spot in the gray right here, we see home price or median sales price of houses sold in the US go down. So slightly down in the 70s, and that was inflation. Really, inflation was a big issue during this. Looks like prices so slightly went prices slightly went down in the 1975 era, the 80s, 1990s. So home prices went down in pretty much every recession. So if we go into a recession now, I mean, technically it's already been on a decline around the nation. But what we see during the recessions with interest rates, this 30-year fixed, is that it kind of goes up first and then it goes down. And maybe think about that during the risk of a recession. Lenders are more sketch about lending people money, and that probably is what influences them to raise rates before drastically cutting in a way. And I'd imagine that prices of or the prices of bonds go down, and treasury, these bond yields go up because of that risk, and maybe because of inflation risk. I'd be interested to look more into all of that, but I thought all of that was interesting to watch. Now, stocks were pretty quiet today. Everybody was really taking in information. Remember, we've been talking about all of this stuff going on. Moody's downgrading US debt, Walmart raising prices because of tariffs, Scott Bessent warning that, hey, like, if these countries don't negotiate in good faith, tariffs could go back to April 2nd levels. So they've just kind of been taking it in, buying the dip, not really moving too much though. Like, dip buying hasn't been very heavy, and today was the first day in 6 days that the S&P hasn't opened or closed at a higher level than it opened at. So it snapped that streak. And what everybody is watching primarily are these corporate earnings. Are they strong or are they weak? What do they say about the economy and what they expect? What's their forward guidance? Are tariffs going to be an issue? What they expect to happen? Trump's tax cuts, which this one's interesting because Trump's tax cuts indirectly through the one big bill could raise the US budget deficit. And why does that matter? What does US debt even matter? Well, this is kind of a good thing because one, it could expand the company and stocks do good, right? But on the opposite end, in the short term, that would, because the bond market's watching this, right? Now, so the Moody's downgrade impacts the bond market, but Trump's tax cuts would increase the US deficit. This could increase the amount of debt, and how does demand really get impacted if, let's just say, you're negotiating with all of these other countries with your tariffs? Maybe they don't at all. There are some big players that they want to be on good terms with, but that's just something to consider. But just like stocks or the supply of money, if you add more, that dilutes. So it, in a way, lowers, it's bad. It's bad. It increases supply, costs go down in a way, right? As the cost goes down for the bonds, the yields go up. And what happens out of that? Lenders, right, like right here, when they expect prices to go up, or um, things to, inflation expectations to go up, they're going to expect to be more compensated on their money for lending their money for any period of time. And when that happens in these interest rates, the economy's more restrictive. It's harder to qualify for credit. Credit's more expensive. And that also lowers demand. So everybody's going to be watching how this Trump tax cut impacts the stock market. Back to tariffs, Treasury Secretary Bessent said that the paused reciprocal tariffs could be resumed if negotiations aren't met, and we could very well see much higher tariff levels. And that's starting to, I don't know, like, and stocks are already kind of at high levels again. Hold on, let's zoom back out on this and look at it. Let's look at the week. Yeah, we've pretty much bounced overall. We're up way higher than we were. We're almost testing all-time highs again. And everybody's like, do I really want to buy at all-time highs or near all-time highs? With the market, I don't know what the market's up so far this year, but I'd imagine right now is pretty good. Why would I want to keep on buying, and I don't know where these tariffs are going to go? Like, look what happened last time these tariffs came in bad. So what could happen out of that? And then on top of that, what's the Fed gonna do? Because they're resisting cuts and they want to wait and see until the dust settles in the economy to really determine how they're going to react. St. Louis Fed President Mussolini said policymakers shouldn't brush inflation caused by new tariffs, warning risks of getting it wrong, of the Fed coming up with the wrong reaction to this are high right now. And that also makes that the Fed's credibility could be hurt if they did the wrong thing. So they really want to be careful. They don't want to lose credibility and make it seem like they don't know what they're doing. So they want to react appropriately. And how do you react appropriately when it's a little foggy in the room? You want to wait till like it's clear and you could, it's more predictable or forecastable to find out what's going to happen. So that's how stocks are moving. We also got some good news on crypto today. And let's just pull up the chart of Bitcoin and see how it's done today. So it really did move, but I mean, it's already been up so much that we could just be giving back some gains and seeing crypto rally in other sectors on this. But there's a new bill that was advanced, and it is known as the Genius Act. And this was a really big one in a way, because with the vote of 66 to 32 to advance the bill, the legislation is aimed at regulating stablecoins, which are cryptos pegged to fiat currency, in this case usually the US dollar, whatever the reserve currency is right now, right? And right now it's the US dollar. This creates the first regulatory framework for stablecoins in the US. It'll require issuers to hold reserves of liquid safe assets, as well as follow anti-money laundering financing rules. This bill advances in Coinbase's S&P 500 inclusion, both to reinforce cryptocurrency mainstream acceptance, and it's a further step to adoption. So a lot of people in the cryptocurrency space seen this as really big news, but mainly though, it's back to what's happening in the stock market. Because as long as, let's look at the SPY. Let's look at the NASDAQ. Let's look at the Dow Jones. Let's zoom out a little bit more. Let's probably go to like the 15. That's what they look on the 15. Actually, and let's pull up gold too. Let's look at how gold's doing. XAU, USD. Let's put Bitcoin USD back. And then maybe for the heck of it, let's put the VIX. The measure of volatility in the market. So based on all of the news that's been happening, so we're on the 5 minute, let's put it on the hour chart. Gold has been going up, and I'd imagine this is from the uncertainty about Moody's, people wondering if they should dump the dollar again and get away from like political risk and all of that, fiat risk. Bitcoin's been doing pretty good because if the country of the reserve dollar, the reserve currency in the world, gets downgraded as far as their credit, I mean, I could see gold, the reason why Bitcoin and gold went up. Although people say we were expecting it to happen, I just understand why these plays did well. And then you see on the NASDAQ, pretty flat since the 13th. The SPY moves up and down, but I mean, in a way, pretty flat since the 13th. Really, yeah. Right after the 12th, that's when we got that pop. All right, and what about the Dow? Pretty flat. We had this little jump and then pretty flat. Gold up. I mean, Bitcoin has been giving back, but oh wait, this is gold. Gold kind of down. It had that run, so it give back and right back up pretty much since the 13th. What about VIX? Down. I'm wondering if there's any other ones we should look at real quick, because it really shows like everybody's kind of like nervous. All right, let's see what TLT is doing. 20-year bonds. We'll put this back on the hour. Pretty flat. Remember, as yields go up, TLT goes down. And as yields go down, bond prices move up, so TLT goes up. Bounced off this 85.10. But US debt, down. So this is a very interesting time to be watching. And I think it's a great time to be learning, and that's why I started making these videos, just so we could all learn together and do the news together and think about this stuff together and have the open conversations, open thoughts. I mean, comment down in the comments below what I'm not considering, what I'm missing, or what you think about what all is going on. And then we could continue having this conversation. But I hope this video is valuable to you. Hope you enjoyed hanging out with me. And I hope your night is phenomenal. Y'all have a blast.